So this is going to be the order of discussion. The first one is going to be a self-balancing ledgers. Then we'll begin with accounting standards, some of the accounting standards in the morning session. Then we'll go for the remaining accounting standards in the evening session. And we'll analyze the partnership chapter with respect to how the question can be tested. Okay. So before we start with self-balancing ledgers, these are all called as memorandum books or memorandum ledgers. Why? Because we want to verify whether all the transactions with respect to debtors and creditors are recorded properly. Let's assume you are not having computers. One is you are not having computers. Case accounts are maintained manually. Okay, daily more than 200 customers. Just an example I'm telling. It can be 2,000 customers also are buying on credit, and they pay in different installments. They can pay it in 10 days, 15 days, 2 or 3 times they may take and pay. Okay, so discounts are allowed to customers. Discounts are also allowed to customers for prompt payment. Please remember, you don't have computers. If you have computers, the self-balancing ledgers are not required. Okay, and accounts are maintained manually. Remember, daily 200 customers are buying on credit, which means 200 journal entry you have to pass and 200 customers account you have to maintain and post the transaction. And these customers will keep paying the money in different times. So daily 300 to 400 entries you will be passing. Okay, and discount allowed, etc. So many things are involved. So let us take you are conducting business for 300 days. Okay, daily sale entry, 200 entries. Okay, collection, past customers will pay, these customers also will pay. That will be another 200 discounts, etc. and all. It will come to somewhere around 400 to 500 entries per day. So it will come to 1,20,000 entries, which are going to be made only with respect to debtors. This is with respect to debtors. Okay, then with respect to creditors, okay, there may be 20,000 entries or 80,000 entries or 90,000 entries like that. So when you are recording so many transactions, remember entry means not just posting in journal. Okay, or recording in journal. You have to record in journal, you have to record in debtors ledger, update the cash registers, update the sales registers, so many things. Okay, so 2 lakhs journal entries in a year. Is it possible for you to do without errors? Is it possible to complete this 2 lakhs entries without errors? Definitely not possible. Definitely not possible. Some errors might come. So at the end of the year, we want to verify. At the end of the year, we want to verify. Or once in 3 months, we want to reconcile or verify by preparing self-balancing ledgers. By preparing self-balancing ledgers. For the purpose of preparation of self-balancing ledgers, nothing but you have to remember debtors account. And you have to remember creditors account. Okay, so this is called as in general ledger. Okay, we are going to prepare debtors ledger adjustment account, nothing but debtors account, and creditors ledger adjustment account. Okay, creditors ledger adjustment account is nothing but creditors account. This is called by different name. Okay. Okay, so this is also called as creditors ledger. Creditors ledger adjustment account is otherwise called as receivable ledger or sales ledger or sold ledger adjustment account. Creditors ledger adjustment is otherwise called as purchase ledger or payable ledger. That is another name that they use. Anyhow, this is nothing but a debtors account. This is nothing but a creditors account. Okay. All these entries are going to be posted in general ledger. So it will begin like this. Okay. Debtors will have a debit balance, to balance brought down. And of course, closing balance will appear as by balance carried down. Okay. Then there's a possibility of abnormal balance. What is an abnormal balance? When the debtors pay some advance money to us, you cannot call them as creditors. See, when amount is receivable, they will have a debit balance, so which is a normal balance. Okay. When they have a credit balance, which is called as abnormal balance. Why it is called as abnormal balance? Because when they pay advance to us, it will have an abnormal balance. To balance carry down. Abnormal balance is nothing but credit balance. Debtors should normally show a debit balance. When they pay advance to us, there may be abnormal balance. Okay. So to balance brought down normal balance, by balance brought down and to balance carried down will come when they pay some advance money to us. Okay. Now what and all will come in debtors ledger in the debit side? Credit sales, then charges made in the account for overdue, etc. You can make charges. Interest charged when for the delayed, interest charged for the delayed payments, all those things. All those things will be transferred to general ledger adjustment account. So all these things are going to be transferred to general ledger adjustment account. Likewise, in the credit side, by general ledger adjustment account, what and all will come in the credit side? Cash collection, bad debts, discount allowed, sales returns. Then these are normal items that will come in the credit side. So all these things are transferred to general ledger adjustment account. Then there is a concept called as transfer, which I will explain it after some time. There's a concept called as transfer from debtors ledger to creditors ledger. That concept I'll explain it to you after some time. So this is what nothing but a debtors account, nothing but a debtors account which we are preparing. See, for shortcut, remember this as a debtors account, that's all. But for the practical reason, today it cannot be found. Why? Because we have got computers that takes care of all these reconciliation and other things. Okay. Only when there was no computers, these reconciliation methods, etc. were used. So purchase ledger adjustment account or payable ledger adjustment account, it will have a credit balance. It will have a credit balance. We'll start with by balance brought down.
Sir, one doubt, sir.
Yes. Please ask.
Abnormal advances. I pay the entire advance or I pay
It may
the
be a
half
part
advance,
money.
sir?
It may be a part money. Part money. Part money.
Part money, okay, sir.
It can be like 20%, 30% of the goods supplied may be paid in advance. Before getting the goods itself, they will pay advance. It's like you pay 20% advance, 80% after 1 month, like that sometimes.
Okay, sir. Thank you, sir.
By balance brought down will be a normal balance for creditors. To balance carried down will be a normal balance for creditor. Here also there is a chance of abnormal balance. If we pay advance to our customers, it will be an abnormal balance. Likewise, there's a chance of closing abnormal balance also. Okay. Then what and all will come in the creditors account? What and all come in the creditors account? Credit purchases. Then what and all will come in the credit side? Interest charged by creditors. Okay, for overdue payment. It will be transferred to general ledger adjustment account. Debit side. What and all we might do? Cash paid to them. Okay, purchase returns. purchase returns, discount receipt, nothing but creditors account, nothing but creditors account. Okay. So all these things are sometimes in allowances. Allowances is a form of discount given. It's not salary, that allowance. It's not salary, that allowance received and allowance given. Okay, so this is allowance given to debtors and allowance received from creditors like that. So this is how we prepare a debtors ledger adjustment account and creditors ledger adjustment account. Here what we have to learn is transfer. What is a transfer? Let's assume 2x we have sold for 4 lakhs. We have sold for 4 lakhs. From X, we have purchased for 3 lakhs. So what is the net amount we'll receive?
1 lakh.
1 lakh is the net amount to be received. Okay. Now here we are making an adjustment of 3 lakhs. We are making an adjustment of 3 lakhs. Simple for the sales. I mean, X will be in debtors ledger. For the purchases, X will be there in the creditors ledger. So simple. We'll adjust 3 lakhs against this 4 lakhs and collect the balance. This will be called as by transfer. By transfer. Then we will to transfer. So this is how we record debtors ledger adjustment account and creditors ledger adjustment account.
So once again, sir, please.
Pardon?
Once again, explain பண்ணுங்க sir இந்த வட்டம்.
Yeah. I sold goods to you for 4 lakhs and you will be there in debtors ledger. And I purchased goods from you for 3 lakhs. You will be there in creditors ledger. Now I will not collect 4 lakhs and pay you 3 lakhs. I will collect only 1 lakh. So what is an adjustment we are making here? We are making an adjustment of 3 lakhs. The transfer will be recorded there. Okay, it is like transferred from debtors ledger to creditors ledger. The 3 lakhs will be adjusted like this. And by cash, I will put only for 1 lakh. By cash, I will receive only 1 lakh.
Okay, sir.
Okay, do you understand?
Sir.
Yeah, this is called as transfers. Okay, wherever they give you transfers, you record this. And most important point, certain things you have got to know. Certain things that you have got to notice. In debtors ledger. Okay, we may receive bills receivable also. And if the bills receivable is dishonored, that will come. What is the journal entry for bills receivable received? Bills receivable account debtor to debtors account. If it is dishonored, debtors account debtor to bills receivable like that. Likewise, bills payable given and bills receivable endorsed. Journal entry will be like creditors account debtor to bills payable for bills payable given. If it is endorsed, creditors account debtor to bills receivable. Then bills payable dishonored or endorsed bill dishonored, that will come in the creditors ledger adjustment account. Please note this. In debtors ledger, the following are to be ignored. Provision for bad debts. Provision for bad debts. Provision for discount. Bills receivable discounted. What is the journal entry for discounting the bills? bills, bank account data, or discount account data to bills receivable account. So bills receivables are discounted. It will not affect the debtors ledger. It will not affect the debtors ledger. Then even bills receivable endorsed also. It will not affect the debtors ledger, and bills receivable renewed. It is just an extension of time. Those things will not affect the debtors ledger. Of course, cash sales also will not come.
Sir,
Yes, please.
sir, what about trade discount, sir?
Trade discount is not recorded at all. Nowhere it is recorded, nowhere it will come. It will not come in any books. In creditors ledgers, cash purchases, provision for discount, bills payable renewed. Ignore the following. Please note this. If you have noted down, I can proceed. If you have noted down along with me, I can proceed. Or should I wait or proceed?
Sir,
I didn't
Wait,
get you.
sir.
Wait, okay. Please copy this, then we'll proceed.
sir,
Yes, please.
how bills receivable and endorsed can come in creditor, sir?
What is the journal entry for endorsement of bill? Creditors account data to bills receivable account.
Okay, sir. Okay.
Okay. So if there's a doubt in posting, if you pass a journal entry, automatically it will come. The transfer will come in both the places.
Hello, sir.
Yeah, please ask me.
Sir, in transfer, we have to show only 1 lakh, sir.
3 lakhs.
3 lakhs. In creditors account 3 lakhs, debtors 4 lakh, sir.
No, both 3 lakhs. You receive 1 lakh cash.
Okay.
Okay, it's like 3 lakhs is adjusted. Balance 1 lakh is received. Because we purchased for 3 lakhs is closed. And that is transferred from debtors ledger. Remaining 1 lakh of cash is collected as per the example.
Okay, sir.
Sir,
Yes, please.
bills receivable renewed na enna, sir?
Extension of time. We are just giving an extension of time. Old bill will be cancelled and we will be giving a new bill. So for that, there will be no effect in the debtors account. We'll cancel the old bill and we'll go for getting a new bill. That is extension of bills of exchange. Time is just extended. Bill is not dishonored. Just time is extended.
Okay, sir.
Yeah. Okay, so this is in general ledger. We do all these things in which ledger? General ledger. Okay, in general ledger, we prepare debtors ledger adjustment account and creditors ledger adjustment account. Then, in the examination, they will ask you in debtors ledger, prepare general ledger adjustment account, general ledger adjustment account. They may ask you. Okay, so how to prepare this? Simple. Whatever was credited, whatever, just an opposite thing. Okay, in general ledger, if it is something is credited, it is going to be debited to balance brought down. Just a mirror image, to general ledger adjustment account, to transfers. Then you need not copy this. You can do this automatically in the exam. To balance carry down like that. Then whatever was debited, it is going to be credited because opposite effect will happen in the other ledger. So it will be like by balance brought down, normal balance. Instead of to general ledger adjustment account, it will be like to debtors ledger adjustment account. Then by balance carry down. Just a reverse image that is done. This is in debtors ledger. We prepare which account? General ledger adjustment account. Same way, in creditors ledger, we are going to prepare the general ledger adjustment account. Just a mirror image of what we have done in creditors. Whatever is credited here, it is going to be debited. And whatever is debited, it is going to be credited like that. So if you understand this preparation, the other part preparation is easy. Now, what kind of question that can be asked in examination? If this question is asked, they will ask you only the closing balance. They can ask you only the closing balance. Nothing else can be asked in this. They can give a problem, what is the closing balance in debtors ledger and creditors ledger? Or they can ask you how the transfer is recorded in debtors ledger and creditors ledger. That is what they can test in an online examination because ledger preparation is not possible. So we will be asked only the MCQ based questions. Let us take up a problem and do it. Two problems we are going to solve. Okay, let us consider the second question first. From the following particulars, the general ledger they ask for. Okay. They have given debtors balance debit, which means it is a normal balance. Debtors balance credit, which is an abnormal balance. Creditors balance debit, which is a abnormal balance. Creditors balance credit, which is again a normal balance. They have given purchases including cash, which means only credit purchases should be taken. Sales including cash is given, which means only credit sales should be taken. Okay. Then we are paying 8,500 instead of 9,000, which means there is a discount of 500. We are getting 14,100. Instead of 15,000. Bills payable accepted is given. Bills payable renewed is given. Bills receivable received is given. Endorsed is given. Endorsed and discounted is given. Bills receivable discounted is given. Dishonored is given. Interest charged on renewed bills is given. Transfer from one ledger is given. Then returns credit, which means purchase returns are given. Closing balance of debtor, but credit balance is given. Then creditors are given. Okay, the question they've asked general ledger adjustment account in creditors ledger and debtors ledger. Okay, I've given the solution for the same. What I'm requesting is do this. What is not there in solution, let us do it in the class. So prepare Question is in general ledger. Okay. But in the question, they've asked for debtors ledger, general ledger adjustment account, in creditors ledger, debtors ledger adjustment account, like that. The question is asked, for which I have given the solution. Okay. Now, if it is asked in general ledger, what is debtors ledger adjustment account and creditors ledger adjustment account? How to prepare it? You are going to do it. Okay, probably let me write the opening and closing balances only. Tell me the opening balance. What is the opening balance in debtors? 20,000. Okay, what is abnormal balance given opening? 300. Then closing balance, credit balance is given, abnormal balance is given 450. Okay, this one we have to find out as a balancing figure. Likewise, creditors ledger, opening balance debit is given, abnormal balance is given 200. Then normal balance given 15,000. Normal balance given 15,000. Closing balance debit is given. That is an abnormal balance, 10,817. Now this normal balance we have to find out as a balancing figure. Now I request you to try this and get the closing balances. In the class you are going to work out. See, for this chapter, don't take extra time in learning and other things. Okay, whatever we have done in the class, that is sufficient for exam. No need for extra learning or extra reference. Try to work out this. Hope you are solving this. Let me to work out simultaneously. Okay. What and all will come in the debit side of debtors account? Credit sales
19,000.
Credit sales 19,000.
Charges 30 rupees. Interest charges 30.
Yeah. Interest interest charged on dishonored bills 30. Then
Dishonored 300.
bills dishonored
400.
400. Then endorsed bill dishonored also.
That is
One entry will be like debtors account debtor to creditors account. Endorsed bill dishonored, debtors account debtor to creditors account. Hope you remember the bills of exchange chapter. Debtors account debtor to creditors account. How much?
300.
300. Then on the credit side, what is the cash collection?
14,100.
14,100. Any
And
bad debts?
no bad debts.
No bad debts. But
Discount
there is a discount allowed. There is a discount allowed. Instead of 15,000, we collect only 14,100.
14,100. So sales return no, sir.
Sales returns are not there. Okay, bills receivable received how much?
3,000.
3,000. Then transfers to the other ledger
600.
600.
So closing balance is 21,280.
I hope there is a mistake in the solution that is given to you. Please correct it.
Bills received endorsed, we should take, no?
Bills receivable endorsed. Journal entry is creditors account debtor to bills receivable account.
Sir, is that bills receivable endorsed, discounted, or dishonored?
That is dishonored. Dishonored. This one. This is dishonored. Dishonored.
Discounted, sir.
It's not discounted. This is dishonored. There is a typing error. Dishonored. This is dishonored, not discounted. Okay, in the textbook, this interest charge has been omitted. That is the error. Or the solution that is given to you in the material, the 30 rupees is omitted. That is error in the solution. But this is a correct solution. Then, in the general ledger, credit as ledger adjustment account. Opening balance is 200. What and all will come? What are the credit purchases? 8,000. Bills payable dishonored. Bills payable dishonored is 500. That is withdrawn. 500. Bills payable dishonored. Bills payable dishonored 300. See, for bills payable dishonored, what is the journal entry? Debtors account, debtor to creditors account. Then cash pays 8,500. Purchase returns, there is credit, returns credit 700. Discount received, instead of 9,000, we are paying only 8,500. So discount received is 500. Bills payable given, our acceptance is given. Bills payable given 2,000. Then bills receivable endorsed. Bills receivable endorsed. How much is endorsed? 800. And there is a transfer of 600. So when you tally this,
Sir,
yes.
இங்க வந்து
Yes.
கேஷ் பேட் வந்து 500 மட்டும் தான் எடுக்கணுமா சார்?
Because look at the problem. We paid only 8,500 in full settlement of 9,000, which means that 500 is discount. Okay, that 500 is discount.
ஓகே சார்.
Sir,
Yes, please.
sir, bills payable withdrawn as renewed, sir. Why did we take this? Hello, sir. That 500 rupees, sir.
Okay. Since bills payable accepted includes renewals, you can check this. Bills payable, this 2000 accepted including what? Renewal. There are two methods of doing it. One is record net 1500 or record 2000, then cancel that 500.
Okay, sir. Sir, can we do 1500 straightly? Bills
Okay,
receivable
can do
accepted.
1500.
Okay, thank you, sir.
Closing balance, debit balance is given as 10,870. Yeah, 10,870. If you tally this, you get the closing balance as 21,370. This is the thing. So this is in general ledger we prepared. Now, if they ask in the reverse, we can just do the opposites. The credits will come in the debit side. The credits will come in the debit side. And of course, whatever is debited will come in the credit side. They ask the opposite. It is simple to prepare. But anyhow, now in the online examination, they cannot test these ledgers. You do any one, in general ledger, you prepare debtors ledger assessment account. They ask the closing balance, write it. In creditors ledger, if they ask you, just do the closing balance and write it. That's all.
Sir,
Yes, please.
and debtor balance, creditors balance, debit credit கொடுத்திருக்காங்கல்ல sir, அது மட்டும் ஒரு வாட்டி explain பண்ண முடியுமா?
Sure. We'll do it. See, in debtors ledger, debit balance 20,000 given, credit balance 300 is given. So these two are opening balances. These two are opening balances. So debit side, two balance drawdown 20,000 will come. By balance drawdown 300 will come. This is the credit balance given. This is the debit balance given. Then, if you look at the closing balance, debtors balance credit is given. Debtors balance credit is given. See, in the appear in the opposite side. By balance drawdown, if that is for credit, to balance drawdown is for credit balance. Yeah. So the closing opening balance and closing balances are given for credit, but debit only given as opening balance. This we find out as a balancing figure. Same way, for creditors, credit balances are given and debit balances are given. And the closing balance, this also is given. Okay, this is given in the problem. This we find out as a balancing figure.
Okay, sir. Thank you.
Yeah.
Hello, sir.
Yes, please.
Could you explain debtors ledger adjustment? That 600 transfer to creditors ledger.
Okay. To the extent of 600, we adjust with creditors. To the extent of 600, we adjust with creditors. Why we adjust with creditors? Mutually, we would have purchased. We would have sold the goods to them and we would have purchased some other goods from them. We would have purchased some other goods from them. That's why by transfer 600 to transfer 600. So why it is by transfer? Debtors will have debit balance. So whenever we sell goods, we debit. So when you want to cancel something, by transfer. Likewise, creditors will have credit balances because whenever we purchase goods, we credit. To transfer is done to cancel that. It is mutual cancellation. It's like a mutual cancellation.
Okay, sir. Thank you.
Okay, hope you have copied this over. Shall we proceed to one more problem? There is a
Yes,
question
sir.
number.
Yes, sir.
So don't learn separately for this chapter. The learning is complete already. Our revision is also complete already for this problem or for this chapter. Okay, just solve this. Okay, if this is a question, they can ask this closing balance as an answer. This will be for about 3 marks and this will be for about 3 marks, like that. For 6 marks, they can test it. Okay, so don't prepare general ledger adjustment account because it's a reverse one. So you will have some, confusions in that. Simple, same style. In general ledger, prepare the debtors ledger adjustment account and creditors ledger adjustment account. Same thing. Try to do it again 10 minutes of time. Okay, just tell me what are the things that will be ignored in this problem? What are the things that will be ignored in this problem?
Bad debt.
Provision for bad debts will be ignored. Reserve for discount will be ignored. Why? Because these two are calculated after arriving at the closing balances. Provision for debtors we create after calculating the closing balance. In the balance sheet only, from the ledger balance, we'll eliminate the provisions. Otherwise, journal entry itself will be like P&L account debtor to provision for bad debt, P&L account debtor to reserve for bad debts, like that. Okay, so try to solve this. 5 minutes of time, don't take 10 minutes, just 5 minutes of time, just finish. Don't take much of break, just 5 minutes of break, then we'll begin with accounting standards. Yeah, those who have not done it, please copy this, debtors and creditors ledger adjustment account. This is one of the simplest problem. Yes, please. Yes, please.
For general ledger adjustment account, this inverse of this account, sir.
Whatever is credited here, it will be debited. Whatever is debited there, it will be credited. Anyhow, ledger preparation cannot be tested. You can do anything and get the closing balances.
Okay, sir.
Okay. In accounting standards, what are the types of questions that are possible? One is match the following questions. Okay, they will give you AS numbers, AS2, AS7, AS10, AS11, AS14, like that they will give you. It will be given in the simple order. Like this, match the following questions can be tested. So it will be like option, this will be libboard as 1, 2, 3, 4, 5, like that. And you have to just match the proper option and choose the answer, kind of a thing. It shall be tested in the exam. This is one of the most repeated area, or I would say a kind of a bonus mark in the examination for CMA students especially. Match the following questions, you will get for 5 marks. Okay, or 4 marks. Minimum 4 marks they test. Sometimes it goes up to 5 marks also. Okay, just matching. You should remember the accounting standard number and the name. That's all. You are getting 4 marks or 5 marks in the examination automatically. So match the following questions can be tested in the exam. This is the first type of question. Okay, that in every examination they've asked. You can go through the passes scanners also. You can find this match the following questions can be tested in accounting standard. Let it be group 2 company accounts or group 1 financial accounts. This match the following questions can be asked. Okay, so they can give any accounting standard number up to AS 29. You should remember just the accounting standard name and the number. For example, here AS2 means inventory, AS7 is construction contracts, AS10 is plant, property and equipment, AS11 talks about foreign exchange, AS14 talks about amalgamation, like that. You should just remember the accounting standard and name to get that 5 mark score. Okay, this is one type. Second type is they can ask you specific accounting standard based questions. For group 1, I hope AS1 is covered, AS2 is covered, then AS6 is merged with AS10 now, AS7, 9, 10, AS7, 9, 10, like that. So in the morning session, we'll see AS1, AS2, then AS7 we'll see. In the evening session, we'll see AS9 and AS10. Okay. So first, disclosure of accounting policy. Okay. There are 3 things. One is a disclosure. Second is accounting, then accounting policy. What is a policy? What do you mean by policy? Policy is nothing but guidelines. Guidelines. Okay. For example, you could have got promotion policy, recruitment policy, okay, marketing policy, marketing strategy, like that. So many things you'd have learned. Okay. So everything, everywhere, the company will have a pre-written policy. Okay. So first one is the accounting policy. The second aspect is, okay, first one is the policy. Second, okay, when I switch on the video, the problem is because there is a heavy rain here, the net connection is a little slow. Okay, coming back. What is an accounting policy? Same. Guidelines in what? Guidelines in preparation and presentation in financial statements. Okay, so every company will have their own accounting policy. For example, you are joining A Limited. Okay, which method they will follow for inventory? Is it FIFO or weighted average method or specific identification method? Which method they will follow? You're joining the company A Limited as a new accountant or a cost accountant. Which method they will follow? You cannot simply say they will follow FIFO. You have to see the accounting policy. So refer the accounting policy. Okay. What about depreciation? Will they follow WDV or SLM? For income tax purpose, WDV is only allowed. But for company's policy, will they follow WDV or SLM? Again, you will say refer accounting policy. How will they treat retirement benefits? Retirement benefits, again, refer accounting policy. So simple. If you don't have an accounting policy, if I join as an accountant, I would have followed FIFO method. 2 years later, let's assume you joined as an accountant, you will change the method to weighted average method. You will keep changing. I would have followed SLM as depreciation method. After 2 or 3 years, you are going to continue or my job there, I am resigning. So you will go for WDV method. So there may be change in accounting policy, person to person it may be adopted. If you don't have a uniform accounting policy, the problem is people will take the accounting for granted. They will keep changing the accounting policy. That's why all the companies are requested to have an accounting policy for preparation and presentation of financial statements. So you can look at significant accounting policies followed in the preparation and presentation of financial statements. Okay, the accounting policies refers to specific accounting principles adopted by the enterprise. Okay, example, like method of depreciation, treatment of expenses incurred during construction, treatment of foreign currency translations, valuation of inventory, accounting treatment for intangible assets, valuation of investments. Like, are you going to go by fair value method or cost-based method like that? treatment of retirement benefits. How expenses are going to be recognized for retirement benefits like gratuity, pension, all those things. Okay. Valuation and revaluation of fixed assets. How to treat contingent liability. When a contingent liability will be taken as a provision. When a provision will be recognized as liability. So you will have accounting policy. Every company will have their own accounting policy. Okay. Okay. For example, let's assume guideline for revenue recognition. Okay. Let me give you different dates. You tell me on what date the revenue will be recognized. Customer pays advance. Customer pays advance. Customer places order. Okay. Customer is given a bill. Goods are manufactured. Goods are manufactured. Goods are delivered to the customer. Then full settlement is made. Okay. When will you recognize income? When will you recognize
Sir,
the
what is the
sales?
first point?
When the goods are delivered, sir.
Customer pays advance. Advance money is received.
A bill at the time of bill.
This I discussed in the first class itself. If there is no accounting guideline, when the goods are delivered, my responsibility is over. I use the same word. Thank you, Harishri. Risk and rewards are transferred to the buyer on the delivery of the goods. So sales income can be recognized. Now, in my company, we don't follow this particular method. When the goods are delivered to the customer, risks and rewards are transferred to the buyer. I can recognize the sales income. Suppose if this happens on 20th February, I will record the sales on 20th February. But in some companies, they don't promise delivery. Okay. In some companies, what they will do is, my job is over once I manufacture. Let us assume manufacturing is completed on 10th February. You are given advance money, you place the order, I also gave the bill. My job is over by just manufacturing the goods. You come and take the delivery. That is, customer has to take care of transport and installation. In such case, the revenue can be recognized on 10th February. Let's assume this is followed by B Limited and this is followed by A Limited. So if you're working for B Limited, you will have an accounting policy. Okay, when the bill is prepared and the customer is placing the order, when the bill is prepared and when the goods are manufactured, sales can be recorded. Sales can be recorded because my job is over once I manufacture the goods. But when you work for A Limited, only when the goods are delivered, my responsibility, that is risk and return transfer, is over. Okay. So depending upon the company also, you can change the accounting policy, slightly change the accounting policy because all companies do not work in the same environment, same method of delivery. You could have seen, right? Sometimes in some showrooms, they will tell that we'll make a free delivery. And so, because that sale is part of free delivery. Only when the goods are delivered, the sale is complete. Okay. In some showrooms, they will tell that, okay, we will pack it and give it. It is up to you to take the delivery and transport, etc. In such case, once the goods are packed, the bill is given, okay, then the sale can be recognized. Okay. So this is called as accounting policy. So every company should have accounting policy. Okay. What are the fundamental accounting assumptions? This can be tested in theory. What are the fundamental accounting assumptions while developing an accounting policy that you have to make? Number one, going concern, which means assume that the business will continue for a longer period and develop the accounting policy. Only then you will not change. That's why consistency. Don't change the accounting policy frequently. Ensure that incomes are recognized on accrual basis and expenses are recognized on accrual basis, due basis accounting. So 3 fundamental accounting assumptions you have to make. It's a theory question that can be tested. They ask you what are the fundamental accounting assumptions. Okay, it can be tested for 2-3 marks. Okay, so you will answer point number A. Going concern. Okay, assume that the company will run for a longer run and accounting policy should be developed for longer run. B, consistency. Accounting policy should not be changed over a period of time, that is immediately or frequently. C, accrual. Incomes and expenses should be recognized on accrual basis. Like that, you just write 3 sentences, that is sufficient. Okay, if we ask you about fundamental accounting assumptions, then what are the factors that you should consider? These are all assumptions. Please remember, these are all assumptions. What are the factors that you have to consider for selecting a proper accounting policy? Number 1, prudence. Prudence means conservatism. Prudence means conservatism. Accounting policy should provide for all losses, but should not record anticipated incomes. For example, here, can you record the income when a customer places the order? Let's assume advance paid money paid is only 10%. Okay, customer is placing the order on, let us assume 5th January. Okay, can you develop an accounting policy that income will be recognized when the order is placed? Like that, can you develop an accounting policy?
No, sir.
Yeah, manufacturing you can do, delivery you can do, that's okay. But can you develop an accounting policy which says, when a customer places the order, I will record the income? No, because it is against prudence. You are recording an anticipated income. You are recording an anticipated income. Substance over form means, okay, substance over form means truth should be disclosed. Truth should be disclosed. For example, a person is having an agricultural income. Yeah, please ask me.
Please, once again for the prudence, sir.
Prudence means accounting policy should provide for all losses. Accounting policy should provide for all losses. For example, can you record stock at cost or NRV? Cost or NRV, whichever is higher. Cost or NRV, whichever is higher. Can you go for this?
No.
Why?
No.
Because if cost is 10,000, if NRV is 20,000, if you take whichever is high, you will record the stock at 20,000. You are recording an anticipated income indirectly. If you sell the stock, you will get 20,000. Only when you sell the stock, it's only a value. Okay, we have not sold the stock. So when you follow this policy, whichever is higher, it will lead to violation. So we'll take whichever is low only. We'll take whichever is low only. That's why we will not record anticipated income. Suppose if net realizable value is only 7,000, we'll record only 7,000. So indirectly, if you look, we are providing for a loss of 3,000. So accounting policy should aim at providing for all losses, but should not record anticipated income. Substance over form means truth should be disclosed. Truth should be disclosed. What is truth? There is a question of fact, or there is a question of fact. Fact is truth. Let's assume a person is having agricultural income and a business income. Okay. Actually, if you look at agricultural income, he's having a profit or he's actually having a loss of 4 lakhs or 5 lakhs. In business, he is having a profit of 20 lakhs. Now, for the purpose of filing income tax return, what is the total income of the person? 15 lakhs. What is the total? 20 lakhs is the profit, 5 lakhs is a loss. Total income of the person is 15 lakhs. While filing the income tax return, he files, in agriculture, there is a profit of 20 lakhs. Please mute. Please keep yourself in mute. In business, there is a loss of 5 lakhs. So he shows 15 lakhs profit. If you look at income tax return, anyhow 15 lakhs of income is disclosed. 15 lakhs of income is disclosed, sir. There is no problem. But if you look at whether truth is disclosed, form is filled, but whether truth is disclosed, no. Truth is you have agriculture loss, business profit. Actually, you should pay the tax. Now, if you look at agriculture, there is a profit. In business, if there is a loss, if you have only agricultural income, no other, we'll be learning this in tax class. Okay, clubbing of agricultural income with non-agricultural income and calculating the tax. If you have only agricultural income and no other business income, then you will not pay any tax. So you fulfilled the formality. but not reveal the truth. Not reveal the truth. That's why there is substance. Yeah, please keep yourself in mute. I request you because my flow is getting affected. So your kids' school will start probably after 8 o'clock, 9 o'clock. Ask them to unmute only after that time. Okay, so coming back, substance over form. Substance over form means reveal the truth. Accounting should reveal the truth. Don't hide income. Don't overstate expenses or don't overstate income. That is called as window dressing. Avoid window dressing. What is window dressing? Hiding something. What is hiding something? It may be ugliest thing or a beautiful thing. You want to hide it by dressing the window. Okay, you want another example? Okay, you are providing excess depreciation. Okay, and you are providing understatement of income. How understatement of income? You will collect cash, you will not record as income. Okay, but you will record all the expenses. So when you understate the income, net profit will go down. And when you provide excess depreciation also, net profit will go down. So you want to show lesser profits, so you do malpractices. Such malpractices should be avoided. Substance means truth. Truth should be preferred over legal formality. Otherwise, accounts is not just a formality. You should express the truth. Otherwise, if it is a loss, show it as a loss. If there is a profit, show it as a profit. Okay. If there's an income, call it as income. Okay. If a division is making a loss, tell that there is a division with a loss. Don't hide. Don't hide. Don't give false statements. That is called as substance over form. Materiality. Materiality means all important items should be disclosed. Materiality means all important items should be disclosed. Sir, what is material? What will become important? What will become important? Two factors will decide the importance. Value of the transaction and the size of the business. Okay. Let's assume in Bharadwaj Institute Private Limited, we lost two markers, two dusters, and 5 air conditioners. Which one should be reported? Which to the stakeholders? Loss of markers and dusters or air conditioners?
Air conditioners.
Air conditioner. Why? Because for our size of activity, 5 air conditioner costing 2 lakh or 2,50,000 is a big value for us. For two markers and two dusters, probably will have 100 rupees value, doesn't matter for us. So value of the transaction and the size of the business will decide. Let us assume in Reliance Industries Limited, they don't use markers and dusters. 5 air conditioners are lost. Will it be reported? No. Why? Because for their size of business, even if they lose 2 crores, that is a normal loss only. Okay. Even if they lose 10 crores, that is a normal loss only. So 5 air conditioners, 2,50,000 is like a change or a kind of a coin that they lose or a small amount they lose. So what is important depends on the value of the transaction and size of the business. You cannot quantify and say this is important, this is not important. It all depends on what business you do, and what is the value of the business and value of the transaction, how it affects. So all the important items should be disclosed. Materiality means all important items should be disclosed. So provide for all losses. Okay. Substance over form. Give truthful information. Then all material information should be disclosed. Okay. How many of you are investing in stock market? Trading in stock market kind of a thing?
I did, sir.
You will be or you are doing? Okay, many people are not ready to go to stock market. Why? Risk. Why there is a risk? Why there is a risk? Because of the two matters. One is truth is not disclosed. Companies do not reveal the truth. Okay, second is important transactions. Material items, which may be cases pending against the company or something like that, they are not disclosed. Though there is a law, people or corporates sometimes do not follow the law. So truthful financial statement, is it there? Question mark. Whether important items are given to me, disclosure? No. That's why I feel a risk and I don't go for directly investing in a stock. Okay, like that many people feel. Okay, so that's why business sustenance, business growth depends on providing for all losses. Okay, giving full information. There is giving truthful information, giving full information about material items. Otherwise, in the COVID situations, I found many companies are getting closed. Okay, and the non-performing assets for the banks goes up. Why? Because this prudence was not there. They didn't keep any reserves. They didn't keep any reserves. Okay, they had huge borrowings. Okay, see, if you see company's balance sheet, you see 100 crores of own capital. Okay, 200 crores of borrowed capital. If something happens wrong to the business, that's all. Then you will be like cafe day Siddharth, where having a crores of business has no use, you have to commit suicide. Okay, so prudence, substance over form, and materiality are the important factors that should be covered. Now, this is a kind of MCQ you will get. What are the fundamental accounting assumptions? A, B, or C? What are the fundamental accounting assumptions? A?
D, sir.
D.
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 Going concern, consistency, and accruals. Okay, so in AS1, they can ask this kind of an MCQ, or they can ask you a theory question. What are the fundamental accounting assumption? You have to just write 3 points and just explain in 1 or 2 lines. Or factors governing the selection of accounting policy. Then you can write the 3 things. One thing which is not covered in the material, which you are going to take it up as a notice: change in accounting policy. Is it permitted? When change in accounting policy is permitted, they may ask you, there are 3 circumstances in which you can change the accounting policy. Change in law, change in statute, then change in accounting standard, then for better presentation of financial information, change in statute, law, or change in accounting standard, or for better presentation of accounting information. Please note this. Yeah, spelling it T. Yeah, the company can change the depreciation method when it is required by law, or change in accounting standard, or better presentation of financial information. 3 reasons. 3 reasons are allowed. Or any accounting standard can be changed, or accounting policy can be changed by quoting any of these 3 reasons. Not only depreciation, any accounting policy can be changed by putting any of the 3 reasons. Weightage of this chapter, not for individual accounting standard. Weightage of the chapter means for accounting standard. From accounting standard, you will get questions for 10 marks. One may be match the following question. Others may be based on the individual accounting standards. Okay. For accounting standards, if you just listen to the revision class, that is more than sufficient. no need for any extra reference material. Okay, so if you have just listened to the revision class, that is more than sufficient. Okay, so I've given the problems and solutions. You can just go through. You can just go through set 3, set 4 like that. Okay, so these kind of questions already I discussed in the class. We will move on to valuation of inventories. Having learned consignment, valuation of inventory is very simple. Okay. Okay. This can be either raw material, okay, or work in progress, or finished goods. Finished goods can be for a manufacturer or for a trader. Okay, how to value? We are going to learn about how to value. So inventory includes raw material, work in progress, finished goods of trader available for sale, that is manufacturer available for sale, finished goods, and of course consumables also. Consumable means oils, lubricants, etc. and all, like indirect materials. So what is inventory? What is inventory? This includes these items which are held for consumption in the production process or for sale in the ordinary course of business. So this is the thing. Okay. So we are going to talk about valuation of inventory. So how to value raw material? Okay. Simple. We are purchasing the raw material. Hope you remember the consignment chapter. Okay, where we learned yesterday. What is the meaning of value of the goods or cost of the goods? What should be included in cost of inventory? Price, duties and taxes.
Installation charges.
Oh, no, that is for fixed asset. That I'll come to that later. Transport, loading and unloading.
Go down.
Good on rent, can it be included? No. Same principle, whatever we learnt in consignment. Otherwise, principle of AS2 is only what is applied in consignment. Okay. Don't include expenses after reaching the godown. Like godown rent, maintenance charges, okay, wages of the storekeeper, administration charges, can be production expenses, etc. And all don't include it. Okay, abnormal losses. Okay, all these things should not be included. Then, elimination from the cost. Elimination from the cost of inventory. Okay, sometimes the government may give some subsidy. Okay, subsidies received from government. Trade discount, of course. Prices after adjusting the trade discount only. Okay, cash discount should not be considered because cash discount is not given for purchase. Okay. Subsidy receipt we'll eliminate. Then suppose if you're importing material, forex losses, foreign exchange losses and gains. See, at the time of importing, it may be dollar.
Sir,
Yeah.
what is under stacking, sir?
Stacking means assembling in the godown, arranging them in the godown. For example, you are dealing in bicycles, it has come in the lorry, you unload it, thereafter you will inspect some cleaning and all you will do, thereafter you will arrange them in the stores, arranging in the proper place. That is called as stacking. Okay. Let's assume we imported a material for $25. At the time exchange rate was rupees 70 per dollar. 70 per dollar. But you paid the money, the exchange rate went to 75 per dollar. There is an exchange rate fluctuation. You are paying 5 rupees per dollar extra. Those losses should be ignored. Those losses should be ignored. So, if there is any duty drawback also. Duty drawback means like input tax credit. It may be GST or import duty or anything. If there is any duty adjustment, it can be eliminated. So cost of inventory includes these things. Don't include all these things. Eliminate subsidies received, duty drawback, and the input tax credit if there is any. You will get the cost of raw material. And same principle is adopted for valuation of finished goods for manufacturers. So let it be valuation of finished goods for manufacturer or valuation of not for manufacturer, for trader. Same principle will be adopted. Okay. So anything spent till the goods are reaching the godown can be included. After that, it cannot be included. Eliminate means you have to deduct. Yes, if you get subsidy for getting material, government subsidy for getting material, that should be deducted. That should be eliminated. If you get input tax credit, for example, 5 lakhs is a material purchased. I pay, let us assume, a GST of 60,000. Now total cost is 5,60,000. If this GST can be adjusted against the GST payable by me on the sale of product, then I will minus 60,000. Then I will take 5 lakhs as the cost of the goods. If GST input tax credit is not available, then the cost of the goods will become 5,60,000. See, for hotel business, okay, input tax credit is not available. Suppose if they purchase goods with GST, cost of the goods is 5,60,000. If Bharadwaj Institute is purchasing a book or a material or a textbook, okay, those textbooks are exempted from GST. Okay, if we buy any goods, if input tax credit is available, we can eliminate that from the cost of material. So please note this. This is the most important thing for valuation of inventory. So valuation of finished goods for the trader or raw material for the manufacturer, we apply the same principle. Please note it. Done? Okay. Now, valuation of finished goods for a manufacturer. Please remember, earlier it was finished goods for a trader. We are going to do valuation for a manufacturer. See, for a manufacturer, valuation includes all variable costs related to production. Example, raw material, labor, direct expenses. Maybe in cost sheet you would have seen. This is part of prime cost. then factory overheads. Okay, so all the variable costs related to production. Okay, all factory overheads can be included, variable overheads, all fixed overheads. Related to production, not administration. Okay, which can be fixed factory overheads like rent, okay, supervisor salary, all those things. Okay, this can be included. It should be calculated based on normal capacity. Okay, fixed overhead should be absorbed based on normal capacity. Ignore administration and selling overheads. It may be fixed or variable, please ignore it. Okay, non-operating expenses and abnormal losses. That should not be counted for valuing finished goods of manufacturers. So all the variable costs related to production, all fixed overheads related to production based on normal capacity can be included, but ignore administration and selling overheads. They are not part of production cost. They are not part of production cost. Okay, please note this, then we will proceed. Okay, then you will have the next question, how to value WIP, sir?
Sir,
Yeah.
sir, if all the fixed overheads above normal capacity,
No, it should be absorbed based on the normal capacity, not above normal capacity. For example, if fixed overheads are 5 lakhs and if your normal capacity is 50,000, then cost per unit is 10. Cost per unit is 10. Okay, you should, using this rate you have to absorb. See, actual usage may be 80,000, 10,000, 20,000. Please ignore it. So it should be absorbed based on the normal capacity.
okay, sir.
Yeah. So how to value WIP? Maybe in costing, in process costing, you would have learned something called as equivalent production. Using that method, you can either follow FIFO or weighted average cost method in valuing the inventory. So this you have to refer to the costing section. This is not part of AS2. How WIP is valued in process costing chapter you will be learning, or Astaf sir will take care of revising when he teaches process costing section. So using the equivalent production method, either FIFO or weighted average method, the finished goods or the WIP is going to be valued. Then first, what cost formula is recommended? Okay, FIFO is recommended. Weighted average methods are recommended. Okay, what is not recommended is LIFO and the simple average method. That is not allowed. That is not allowed for valuation of inventory. Then final valuation principle will be cost or NRV, whichever is less. Cost or NRV, whichever is less, is the final valuation principle for inventory. So recommended cost formulas are FIFO or weighted average method. Not recommended is LIFO and simple average methods. Okay. There are other methods also like specific identification method that is recommended. FIFO, specific identification means you identify the stock with the respective invoice price, then value the goods, or cost price, you value the goods. Okay, or you can go for FIFO or weighted average method, but LIFO and simple average method are strictly prohibited as per AS2. Then the valuation principle will be cost or NRV, whichever is less. So we learned the theory. Okay, let us see the problem section. Okay, these things I would have given you. Go through this. These things I've taken from ICMA material only. Closing stock 10,000 units costing 10, that is 1 lakh. But the current market price is 9, that is 90,000. So value of stock will be 90,000.
90,000.
This can be tested in MCQ. This can be tested in MCQ. Okay, so it's with answers I've given. Next. Cost of the stock
Sir?
is 60,000. Okay, yeah. Yes, please.
சார் இப்போ வந்து இந்த சம்லாம் போடுறோம்ல சார், இந்த சம்லாம் வந்து எப்படி எக்ஸாம்ல எப்படி சார் எழுதுறது?
90,000 you will type, or option will be given. A 1 lakh, B 90,000, C 1 lakh 10,000, D 80,000, like that. You have to choose like that. You will not be typing the answer for this.
ஓகே சார்.
Yeah. From the following information presented by P Limited, ascertain the value of stock to be included in the balance sheet. Cost of the stock is 60,000. Being obsolete, it can be used for production process rupees 10,000 after modification. 10,000 after modification. The same can be included as a byproduct for an existing product. Purchase price for the same is 40,000. Purchase price for the same is 40,000. Okay. Now, what is the value of the stock? It's simple. Instead of using the material, if you buy some other material, for example, I want to make product X. Buy product X. Buy product is nothing but product that is recovered in the wastage discarded in the main process. For that, I have to buy raw material 40,000. Instead of buying the raw material 40,000, I can use scrapped material. But for using the scrapped material, I cannot spend just like that. I cannot use just like that. I have to spend additional money. I have to spend additional money. 10,000 rupees I have to spend. So the effective values, I save this 40,000, but I have to spend this 10,000. The net realizable value for the inventory is 30,000. NRV is 30,000. So I'm not going to buy the raw material for 40,000. I'm going to use this scrapped material by spending 10,000. So since I'm using the scrapped material, I'm not going to spend this 40,000, but I'm going to spend this 10,000. So value of the raw material is 30,000. Okay, this I've taken from ICMA material only. This is one of the very famous question or repeated question in the exam. For every item, you have to compare the cost or NRV, whichever is less, you have to take it. For this, you will take 28. For this, you can take anything, okay, 32. For the next one, you can take cost or NRV, whichever is less. So if you add 28 plus 32 plus 16, the total value is 76. So this can be tested for 2 marks. This can be tested for 2 marks in the exam. For every item, you have to compare cost or NRV, whichever is less, you have to take it. This also you can find. It's a little tricky question that is there in the material. Okay. Cost price, we are given expenses incurred to bring into saleable conditions for different types of TB. We should ignore the total. Total, don't take it. For individual items, you have to work out. Okay, what is the cost price? 10,000 plus you have to spend 3,000, 13,000. 20,000 plus 2,000, 22,000, 35 plus 5, 40,000, 50,000, like that. NRV is given 18,000, 30,000, 36,000, 55,000, whichever is less. Whichever is less. Why 13,000? Because cost or NRV, whichever is less. Even here, whichever is less. Cost include that estimated amount to be spent. Okay, this one 50,000, like that. This question can be tested. So total value of the stock is 1,21,000. They can ask the total answer as, 1,21,000 as the main answer, or they can ask you individual calculations like Onida, Philips, EC, and Sony. They can ask it separately. Okay. Now, this is not included in the material. Let me give you. Have the heading Valuation of finished goods for manufacturer. During 2020, okay, 1920. During 1920, units produced 50,000. Units sold 45,000 at the rate of rupees 300 or 3,000 or 300. Please take up this problem. It can be tested in the MCQ or 2 or 3 marks. Raw material rupees 25 per unit. Please copy it along with me. Labor rupees 15 per unit. Direct expenses rupees 10 per unit. Factor over variable rupees 10 per unit. Fixed rupees 6 lakhs. Administration overheads variable at the rate of rupees 3 per unit. Fixed rupees 40,000. Selling overheads variable at the rate of 2 per unit. Fixed rupees 1 lakh. Okay. Normal capacity 40,000 units. Maximum capacity 60,000 units. Theoretical capacity 80,000 units. So maximum capacity with loss of some idle time, theoretical capacity is not possible to achieve at all because that is based on the standard test conditions. You could have seen while selling the vehicle or bike, they will promise 100 kilometers per liter. So, which is not achievable. That is called as theoretical capacity. Maximum capacity is one where you don't have any traffic and there's no ups and downs in the road, no speed breakers also. In 4th gear or 5th gear, if you keep riding at 40 kilometers or 50 kilometers speed, you will get this. Normal capacity is possible based on the traffic conditions like that. Okay. Now, the question is calculate the value of closing stock. Calculate the value of closing stock. 50,000 units produced, 45,000 units sold. So closing stock is how many units? 5,000 units. So theoretical capacity is without any loss of idle time, without any loss, which is not possible to achieve. Maximum capacity is after providing some normal losses. Normal capacity is based on demand, supply, long range averages. What is possible is normal capacity. So calculate the value of closing stock. Calculate the value of closing stock is the question. Okay, all variable costs will be taken based on the actual rate. Raw material, labor, direct expenses, factory overheads, all variable costs will be taken based on normal rate. 25, 15, 10, 10. Fixed overheads. Only factory overheads related to production. Okay, only factory overheads can be taken based on the normal capacity. 6 lakhs divided by what is the normal capacity? 40,000. So this is 6 lakhs divided by 40,000. So if you look at this is the cost of production. Okay. So what about administration and selling overhead, sir? That should not be considered. That should not be considered. So closing stock value will be 5,000 units into 75 rupees. So this is the value of closing stock. So for a manufacturer, take the variable cost of production, raw material, labor, direct expenses, and factory overheads. This is nothing but variable component. Variable cost will change with output, of course.
Sir,
Yeah.
cost of production மட்டும் ஒரு வாட்டி சொல்லுங்க.
Cost of production is 1 minute. I'll let me to come to that. Fixed overheads. The factory overheads only can be included. Otherwise, up to this, variable cost of production plus fixed cost of production, we call it as cost of production or production cost. Okay. So only this can be included. Administration and selling overheads cannot be included in valuation of closing stock. So only up to factory overheads you can include. So production cost or cost of production as per AS2 includes only variable cost of production and fixed overheads incurred for production. Fixed overheads are calculated based on the normal capacity, 6 lakhs divided by 40,000. So production cost is 75, that into 5,000 units. 5,000 units at the rate of 75. Am I clear to you?
Yes, sir.
Yeah. Selling price is 300. Selling price is 300. So we won't take that. 75 is the cost of production. We will consider that. This model question can be tested in the exam. FIFO, LIFO, weighted average, simple average. Okay, that can be tested in costing, group 1 costing, material chapter, stores ledger preparation. Yes, that can be tested there, but not in accounts. In accounts, these are the different models possible. So whatever we discussed here, this ICM enrollments plus this particular problem like that, it can be tested. Okay. So let me to postpone this accounting standard 7, accounting standard 9, and AS 10 to the evening session. Okay, evening we'll start by 7 p.m. Evening we'll start by 7 p.m. because we have got the TV channel program by 4:30. 4:30 to 5:30 it should get over. So traveling time and other things, I'll reach the office by 6:30. So we'll start by 7 o'clock, 7 to 9 or 7 to 10. We'll discuss AS7, AS9, AS10, and also about what kind of questions that can be tested from partnership chapter. Okay.